If you're watching this, you've likely noticed the insane surge in gold prices recently. Gold is hitting one record after another. Over the last year, it has gained approximately 49% on an ounce basis. It seems like the whole world has suddenly rushed into gold. So, is this massive rise a bubble, or is it driven by solid economic and geopolitical fundamentals? In this video, we're going to analyze the four main reasons that are pushing gold prices to these record highs, explaining them in the simplest way possible. Let's dive in. First, let's briefly remember why gold is so important. For thousands of years, gold has not just been jewelry, but the most reliable safe haven asset. Unlike paper currency, it's a limited resource that governments can't print to devalue. This is why in times of uncertainty, investors trade risky assets for the safety of gold. And right now, the uncertainty is not just local, it is global. The price of an ounce of gold hitting its all-time high of approximately $4,380 clearly demonstrates this trend. Now, let's knock down the dominoes behind this massive increase one by one. The first reason is global geopolitical risks. The world has been more tense than ever in recent years. Regional conflicts, international trade wars, and major political instability raise concerns about the global economy. What do investors and fund managers do in this environment? They flee from risky assets and head for a guaranteed sanctuary, gold. Gold prices generally rise in direct proportion to the expectation of a global crisis or war. The current high prices are the clearest proof that the market sees the near future political and military landscape as highly risky. This is not a short-term rise, it is an instinct for long-term protection. The second reason is the return of inflation and the decline in money's value. Inflation, which was low for many years, has become a global problem recently. Inflation erodes the purchasing power of the money in your pocket. Historically, gold has been used as an inflation hedge. While your currency loses value, your gold preserves that value. Although central banks are hiking rates to fight inflation, markets believe these rates will be insufficient to truly tame it. This expectation drives large investors who believe inflation will remain high for a long time to park their money in gold. In this scenario, gold is not just an investment, it's a necessity. The third reason is the insatiable gold appetite of states and central banks. It's not just individual investors. Governments themselves are accumulating gold. Central banks, especially in developing nations like China, India, and Turkey, are buying record amounts of gold to reduce their dependence on the US dollar and strengthen financial stability. This large-scale institutional demand fundamentally affects the supply-demand balance in the market. When a country's central bank suddenly buys tons of gold, it naturally pushes prices up. If central banks are buying gold, it means they are preparing for future economic uncertainties. The fourth and final reason is the global debt burden and the fear of recession. Global debt levels are at historic peaks. The debt ceilings of many major economies, including the US, are constantly being tested. This situation creates a fear of a major economic collapse or at least a prolonged recession in the markets. During a recession, corporate profits fall and stock markets crash. This is when the investor shifts their money to a physical asset unaffected by a recession, gold, instead of losing it. Gold prices act as a market stress thermometer, reflecting these concerns. In summary, this surge in gold is triggered by a combination of geopolitical risks, inflation fear, central bank purchases, and recession concerns. Gold continues to reclaim its historical role, remaining the most reliable asset in an age of mistrust. So, do you think gold will pull back from these record levels, or will we see new highs? I'm curious to hear your comments below. Don't forget to subscribe to my channel and hit the bell icon so you don't miss my future analyses.